right, so here we go, and I thank you very much for letting me know that you can see everything. This morning we're taking a look at the 4-hour charts. We can see that we're caught between the moving averages right here. This is a support region in my estimation. It should hold the weekly pivot, but let's take a look at the competing energies here. We've got the slow MACD sloping upward, the fast MACD sloping downward, the fast SMI sloping downward, but in positive trending territory. Both of these guys are in positive trending territory. Slow SMI, stochastic RSI, sitting in neutral to negative territory. If we are sitting below this mid-range area, 35, 40, that sort of thing, we are really just still fairly in negative trending territory. And so we do need to be conscious of the fact that although we are above here and we should bounce off of support regions, whether it's this 2061.75 or 2057.75, we should bounce off of this area, and this looks like a very, very noisy day. Let's collapse all the way into the 30-minute and see what we've got going on. We see a coiling of the moving averages. We are sitting underneath these technical indicators, and we are rejecting the 50 on the daily. Lots of negative momentum on the 30-minute chart. This tells me that we should come into the support region before bouncing, where the 4-hour chart motion will take over once this thing is finished completion. Notice we've got positive divergence on the fast SMI, but nowhere else. And so that does mean we're going to see this negative traction here. Watch it follow through. What's the trade? The trade is, if you want to see it come into the Globex low action, sorry. If you want to see it come into the Globex low, then it's something certainly you can take a look at. A trend line here. Sorry, I'm fighting off a sneeze. A trend line here shows us a little bit of support action. Notice the squeeze in the moving averages, the drop off. Let's compare the range of motion from here in the slow MACD to the next test of the region. It is momentum is sideways, even though price action looks like it's moving up. Fast MACD rolling over just a little bit. I think I want to change this to a 10. Less sensitivity. Let's see if that holds us. I'm also going to change this. Don't fret, folks. Just checking it out. We'll see how it goes right here. Yeah, this tells us we have mixed momentum, so it should chop us around fairly well. But if we lose this, these guys are still underneath the 50% line, and so we should see the collapse into the region. You know, could you aggressively take it below 2063.50? Yes. 2063.50. Write that down, and we'll see you know, how it works through. Pay attention to your 15-minute chart. See if you can get yourself squared away from that perspective as well. Make sure these things converge in terms of giving you just what it is that you need. All right? And so taking a look at the TF or 4-hour chart again, Different range of motion, fast MACD running downward here, fast SMI running downward. That means the lines are going to be following the trajectory of these candlesticks, whereas the retest 1243 seems really legitimate to me, although we do have additional support down at the 1240 area. I'm going to activate this just a little bit, shift it up. It's sitting right at the weekly pivot, really, and so that may end up being a secondary press downward if the charts are trying to move in that area. We are sitting under the 50% range but sloping upward, so we should meet buyers here. This should not collapse into the region. Just read some Fed chatter about, interest rate increases potentially on the horizon. I don't know if that dampens anything or whatever, but that might be influencing the day just a little bit. If we put an additional trend line event here, we can see that this 50 here is likely to give us some resistance ahead. So, what's the trade? Look at the negative momentum here. From the last time we tested this region to this time we tested this region, we have more deepening action to the south on our longer moving averages, our longer, slower technical indicators. So that does suggest to me we have a pullback into deeper support on the horizon. Taking a look at the TF, on a 5-minute, we've got a moving average squeeze. We've got a draft to the upside and then sideways action. Let's take a look at this. Here's the last time we connect with these moving averages to here. Slow MACD is negative, fast MACD is positive. Taking a look for the SMI, fast SMI, slow SMI, stochastic RSI, all pointing upward. So this makes for a very messy chart. Very messy, because this very small time frame is punching upside, suggesting a hold and a move into resistance, while the longer technical indicators are drifting downward. So what do we do here? Really need to wait for it to get out of this mess. You know what? Time to draw a fib here. All right, this 38.2 to 61.8, that's the top of this range here. You know what? We'll look up here. I don't see anything attractive to trade in the TF right now. It is very, very noisy and unreliable, but the very small time frame is saying that buyers should come in here and start pushing this chart to the upside. We really need to wait to see what these charts do, as they are sitting right at nearby resistance and only a couple of indicators pointing to the upside. Let's take a look at oil. A lot of people thinking, wow, this was my double bottom here. Everything's great. I'm going to be moving to the upside. And we've done nothing but collapse for 4 days. We did, yesterday's video that I put out said that we were very sideways in our price action and it was going to be a messy day. It did turn out to be quite a messy day. Remember this. I had said along maybe up above 49.14. It went to 49.16. Listen, when you hit a price point that is sitting in the block, you must have technical momentum in your favor to take it at the breach, and it must be present in most all of your indicators, particularly the fast ones that are pushing you up into the region. And that is from a location perspective. Yesterday we had nothing of the kind, everything clearly showing that rejection of the region was very much more than likely. Okay, so that being said, today, as we look at these guys, here we have a sideways pattern. This always gives us a great idea at where momentum is going, and this sideways pattern is punching down. We have really sharp movement. The one fly in the ointment is the fact that this fast SMI is pegged. And so as we meander here near this support region, it is very likely that it gives us one more punch down and then tries to make its way back up into resistance. That's really what we want to watch for. Let's see if that is present, showing up here in the 30-minute chart. It does appear to be that way as we look at technical divergence on slow MACD and the slow stochastic RSI. There is no technical divergence sitting in the fast SMI, but there is slope in this space, so that does push us into resistance. What does this look like? Another very, very messy day in oil. You want to trade support to resistance and resistance to support, and that's all you've got, folks. It is really all you've got today. I believe this is a fairly good hands-off event until the chart breaks down through its ranges. Now, the 15-minute chart shows upside drift into resistance. It's giving us that. We've got the rotation. Look at this. Everybody's coming into their zero lines and making a decision. There is more volume punching in here as it comes into the open. It's going to be very, very interesting to watch. I'm leaving the 15-minute there. The 5 minutes become extremely noisy to trade at this juncture. Just going to be watching for more momentum. It's been very difficult trading 20 cents at a time. It's very, very annoying. Let's take a look at the NQs. We've got this trend line here. Sloping action on the 4-hour. On the slow technical indicators, suggesting that there is support to be had right around here. The weekly pivot shows the pullback. Could we come into the 50 daily moving average? Absolutely. That's 43.35. We need to watch for that area very, very closely. At that point, as it pulls back, if we take a look at this 30-minute chart, we can see steep price action in negative trending territory, suggesting that bounce actions, if they appear at this juncture, will be into resistance. And where is that? Just under the Globex at this stage. Could we have a secondary motion here at 43.65? Absolutely. We absolutely could. Fast MACD really, fast SMI running us into resistance, but resistance could be here or here. So I don't like the way this chart looks either. Doesn't look very pretty either. All right. Let's, I've been looking at gold, so let me move this NQ back into this region. And then let's, oops, silly woman. All right, let's take a look at these others. Thank you very much, Bella. I appreciate that. Oops. Wow. All right, let's take a look at Apple. Apple did a very interesting bounce action yesterday. right off of the 50. Now, we did talk about this also. The videos are a great place to look back and see how these things move. Now we've got a rising wedge here again. Higher lows, higher highs, but at a different rate. We're squeezing in between the moving averages. We've got upward slope in negative trending territory. So again, we're going to look for resistance to take over here. Resistance. And so what do we look for? If we overpower resistance above this 126.80-ish area, we're going to stair step into the 128 and then 128.80, eventually the 130.50-ish area that we know about. Let's telescope into a 30-minute chart, see what we've got going on here. Sideways, caught between these guys. Let's take a look at the drift. We have support under here, resistance above here. We have trending long action, but very, very high, so we know we need to pull back into support. I suspect a drift back down here, and then essentially sideways action, because the broad market doesn't look like it's going to carry us at all. If we're looking for upside momentum, that is. All right. If we take a look at Netflix, we're going to see that let's take a look at the double bottom event. Double bottom event is showing us positive divergence with the slow MACD. Fast MACD doesn't really tell us anything like that. Even, I mean, trough to trough, yes. Peak to peak, yes. So we do have not line action, but if we look at drift, right, we've got this level at this reading and this level at the same reading, and so we are looking for upside drift here. Popping off of this region is going to give us a pretty fair trade, but notice this, there are sellers waiting for us, and they're probably going to try and exercise some control around 424.50 today, so watch out for that. Should they overpower them? Overall, I think so, but it may punch through, reject, come back in to retest the area, and then take over. 30-minute chart showing us a squeeze, a hold of price. But let's take a look at what's happening in the squeeze. See the drift? There is definite drift in this squeeze. We still have positive momentum in the slow MACD. Fast MACD, we do not. It is negative. So I suspect that what we're going to do is drift into support, as I mentioned, but buyers should still try to hold this. Now here's the thing, if you try to take it off the low and it comes into resistance and it makes a lower high, you're to immediately say to yourself, I've got to trim this. This is not a formation that is likely to hold for me. Yesterday in the blog, I said something in the blog, I said something on the video about Tesla. It was a textbook beautiful trade, 13 points altogether from the low to the high. Very, very nice. Today, 4-hour charts, these guys are very far apart. So although this might bounce out, it is going to retrace unless we see a steepening motion here. And so what we want to do is telescope in. We'll see that the 200 is providing some measure of resistance, and we've got flat action here, but look at the slope on the flat action. damp, and then negative, but moving to the upside here. This is a very messy chart. When the charts are messy, wait for support action to take along. Watch the resistance measure. Remember, as long as we're sitting above that 50, we are going to have buyers that come in just a little bit more often than sellers until we start breaking down. We're squeezing in between the moving averages. If you want to take this long and you take it out of the breach, remember that sellers are very likely to greet you at 197 and then rotate you backward into a stronger level of support, unless they come down into support, hold the region here, and then move forward. I think, of course, that's the better bet for the long, to wait for the pullback into support. Here's Baidu, sitting sideways for, a month and a half, almost 2 months, and now coming off the bottom one more time, higher low, negative divergence, negative divergence. There's positive divergence here. Very messy. Look at this. This is not a good chart to trade right now at all. It is a very, very, very bad chart to trade. It is noisy on virtually every single time frame. And so if you take a look at this and it comes into the support region, watch the sloping action here. Because of the location, it should find buyers, but this sloping action suggests that frontline support is going to get broken. So watch it as it pulls into frontline support. Maybe you can have a bounce pattern somewhere around 206, 205. I know it'll be under those moving averages, so you're going to watch it as it comes back up into the 208, see if it holds. That's really super messy right now. We are watching Qualcomm. I think Qualcomm's set to do something. I had seen it a couple of days ago as it was lifting off of these regions, but it just looked so congested. I did not trust its ability to move forward there. Sure do wish I had taken it. However, now we're looking at resistance, and I mean from an intraday perspective. Us working on this one, it's really very, very interesting chart. All right, SanDisk. Again, potential bottoming event here, but I said yesterday, hey, if it loses 65.95, you're going to watch it go lower. It did lose it and then popped right back up into the region, so it's a good short into support. It is trying to flatten itself out. Look at the change in momentum from the fast lines. And now we've got slow line change in momentum, and we're also sitting at very, very negative spaces. So watch it right out of the break there. Going to be a fairly interesting trade if it holds the measure. Look at the squeeze on the 30-minute here. It's been a while since we've seen all of these things squeeze so very tightly. We can definitely see that over the prior day's high, we could have a shot to the upside. The one fly in the ointment, of course, is that the MACDs are sitting near zero. There's chop. That suggests that the bounce out should have a retest, and the retest of the region is going to give us the better trade. Let's take a look at Yahoo. Yahoo should come in and hold the 44.50 area. That's what we're going to be looking for from a bounce perspective. It's got a little bit of negative divergence, folks, so it could come in here, lose the level, and then come back again, which is what it's been likely doing. But it is squeezing a little bit here. Here's the thing. If you watch it come into the 44.50, you can take that bounce. And then what you can do is allow it to punch up into resistance. If it cannot hold, you get out of dodge. But fairly interesting trading setup here. as we look at the 30-minute, you can also see that it's coming into a baseline event that it normally does bounce off of. And so though we have some technical divergence, this is very low. So my thought is, if it breaks down, allow it to settle in here at a tighter time frame before you jump in. Maybe it needs to come to 44.37. That's the support level 1 on the weekly pivot. This is very, very shallow, very, very deep down in here. It's a very low number, and so we expect the chart to bounce, but let it trade on the edges of this thing. Do not trade in the middle. It is not going to be a good thing to do. Lastly, let's take a look at Facebook. What Facebook has is a little bit of a sideways pattern. Let's go all the way into the 4-hour chart. We can see that it's coming in an S-curve test. It's got a lower high, momentum holding upside, positive divergence everywhere. This is a support region, 82, 88, 82.60, somewhere around there. This chart should hold. Notice the difference. MACDs pointing up, all SMIs pointing down. We've got to see something happen here for this chart, and until it settles in where these guys are all moving in the same direction, this is the kind of formation we're going to have. Notice, and these guys are stronger technical indicators than the MACDs are. That's why we've always used the SMI. It's just plain stronger. So it should catch from a form perspective. However, because it's got the high, the low, and the lower high, if it breaks this level, it is telegraphing at least a test of the lower low, and if not at least that, it should collapse down into that original 80-30 area that gave us our breakout. If it doesn't hold there, we're going to look at the 50. So form suggesting that we should bounce and hold, but
it's 9:30.
Momentum showing us that form may be broken. So you want to be fairly careful here as we move into a 30-minute chart. We're about to start. There's the bell. We take a look at this region and we see, tight action with not a lot of divergence that's positive. So that is a very, very messy chart. All right, that's it for the opening remarks, and we're going to close this off here right now.